Ladies and gentlemen, thank you for joining. Welcome back again for another Discord meeting. We meet up almost every single night at 9 p.m., minus those Fridays and Saturdays. But if you want to join us, check out the link in the description. We are going to go over the state of the market. We're going to let you know where we're at using stage analysis. We're also going to be going over my trades, what I'm in and what I am watching for. So that watch list is going to come up very, very soon. And I encourage each and every one of you to always do your homework. I'm going to help you out. I'm going to give you that first step. I'm going to give you those baby steps, but I can't take those trades for you. Do keep in mind, these are my ideas. They are not yours. So use risk management. And if you hear anybody pop in other than my beautiful, beautiful voice, do keep in mind it is our Discord community that, of course, you can be a part of for absolutely free. So hit that like, hit that subscribe button, join our free community so you can be a part of these Discord meetings with us. So let's get right into it. And as we pop in, I see Nylish. What's going on, Nylish? It's good to see you joined up, brother. All right, guys, we have the S&P 500. Now, we were just talking yesterday on live. Listen, there's a ton of fear. There's a ton of FUD. There's a ton of real live examples going on out there that say, don't invest in this market, right? I had a friend, Stu, my boy Stewie, very, very good friend of mine. Stewie actually popped in and he said, hey, look, dude, I have, I'm going to try and bring this up for you. He goes, what do you think about this? And it was a picture of the of the debt. This is the consumer loans, credit cards, and other revolving planes, all commercial banks. The debt that's climbing high. He goes, what do you think about this? And my response was, there's always going to be fear in the market. There's always going to be a piece of news or something that keeps us worried, always giving us that fear to invest in the market. But we need to have something that eases that burden, eases that pain of that fear, that FUD, all of the news that comes out. And me, personally, I use this 21-day moving average. I've even made it a little thicker for us so we know that that is my base, my grounds, okay? I even do this. Let me tell you guys, I have a much, much bigger account that I let a financial advisor control over because I don't want to have that much money under my control. Now, this, when it broke down and closed below the 21-day moving average, I called him this exact day and I said, get me out of the market. Usually I am 60% stocks, 40% bonds. Well, I called him and I said, I want to be in all cash after this broke down. When it started to break back up and we closed above a 21-day moving average, I called him back the very next day. I don't care. Tail between my legs, I don't care. I am risk on when we're above and I'm risk on or off when we are below. We are risk on. We talked about being risk on. We continued to preach about being risk on. And sure enough, we made new all-time highs. If you guys remember the live, we actually had a poll out and 82% of the 20 people that were with us that day agreed that we were going to see new all-time highs this week. And sure enough, the community was right. So, Night Owl, I see that you just joined, brother. Good to see you in the chat. So, we are new all-time highs. We closed at a very high 534.69 for the S&P 500. So, what am I going to say? Well, we're a little extended from the 10-day now, so be careful. If you have not taken your trades, if you have not added in or bought into those trades when we were lingering around that 21-day moving average, I would say now you only are taking those 5-star setups, okay? Because now we are going to be a little extended in everywhere that you look. If you're not already in, well, expect a pullback or at least some sideways action. Now, we talked about that same issue here when we broke up above. I talked about we are a little extended in the 10-day moving average, and we stayed that little bit extended, and we headed up higher until we bounced off the 10-day moving average. Okay? Now, this same thing could happen, but you don't want to be chasing. You want to already be in. So, hopefully, we can see this thing play out just right, trade sideways, let the 10-day moving average catch up so we can find some more trades. So 5-star setups only from here on out, but we are moving up on a 10-day, 21, a 30, and a 50-day moving average. The market is looking beautiful, and we are still risk on, baby. That's what we love to see. Now, let's see if there's anything that we can look into a little deeper to see if there's any issues that might be arising. Let's take a look at the QQQ. We shouldn't see any issues there. As we know, NVIDIA is climbing higher, Apple climbing higher. All of your big techs, we can look at the market watch. Green, baby, green. This is your QQQs. The technology sector is green, 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 okay? Popeye would be happy as hell to be in this market right now. IWM. Is there a question? Sorry. Nylish? Nylish, you better mute yourself, brother, or you're going to get muted. I sound so grumpy. IWM, so this is your Russell 2000, or this is your, this is your Russell 2000, but you also can see this as your small and mid-cap stocks. So your small and mid-cap stocks, it's very, very clear that it has had some issues down here, breaking this trend line and just trading sideways. What I like to see, though, today it bounced up higher and is holding above that 50-day moving average. That is a beautiful thing to see in overall of the market, right? We want to see that we are staying above a 50-day moving average. I would like to see this curling up to the north side. It's pretty much just flat right here at the 50-day moving average. So I would like to see this start to curl up. Now, I'm going to put myself on blast here. I promise you guys, this is what I truly think my thesis with all of this is simply the IWM. If this thing starts to rip and we really start to see some legs and eggs on this baby boy right here and some volume start to come in, I feel like there are so many investors that are not in small and mid caps right now that people, even investors, large institutional ownerships, are going to start having that fear of missing out, and they are going to load the boat here, okay? Now, if we don't, we start to come down, this will probably be the first thing that comes down, okay? Because it's been lagging the overall general consensus, okay? But right here at 205, we're looking very, very tasty, and I think if we do start to push higher, we do get away from all that fear, that FUD, the issues that we've been having on a rising 200-day moving average and holding the 50, I think the IWM can rip, tater chip to the north side. Now, you guys know that I love to look at the RSP. What is the RSP? The RSP is the equally weighted S&P 500. We want to know that the overall sectors, all of these sectors on our market watch list, the consumer, the information, the consumer services, discretionary, industrial, energies, utilities, healthcare, we want to see that these are all coming up equally, and it's not just one thing dragging the market higher. As I heard some people say today, well, NVIDIA is the only thing dragging the market up. Well, that's not true. As you can see on the market watch, it's green, baby, green. This is a salad if I've ever seen one. So looking at the chart on the RSP, the equally weighted S&P 500, you can clearly see that we are above all moving averages and we are rising on most of them. The only issue here is this 50-day moving average, but I'm not going to argue with the price action, okay? Price action is telling me that we are still in a healthy market. Now, I don't have a crystal ball. I don't know what's going to happen tomorrow, but what I do know is that I have a process to tell me whether I should or shouldn't be trading. What we just went through tells me I should be trading and there's nothing to worry about. S&P 500 is above all moving averages. The IWM is above all moving averages. The QQQ is rip, tater chip like per usual. And the relative equally weighted RSP is above all moving averages, okay? So things are looking very healthy in the market, and we have been saying that for a long, long time now after this 6-day bloody sell-off, okay? There has been some issues in the market. There's been some fear. There's been some FUD, but as you guys can tell, everything is working accordingly. Now, we can go over my trades, but before we continue, is there any questions about the relative state of the market? It can be news, it can be technical analysis, it can be a different ETF if you want to, but if you have any questions, now's the time to ask, and I'll take a little sip while I wait.
Has the breadth of the market changed any the last day or so?
I would say yes, because if you remember in the equally weighted RSP, that's a great question, Dan. If you guys remember in the RSP, when we had this, so this is where I noticed the breadth in the market, okay? If we break down below all these moving averages, I would say no, there's not much breadth, okay? Because the S&P 500, what's that, 6 days ago, you can see it was above all these moving averages. So we had 1, 2, 3, 4, 5, 6. It was above the 21-day moving average. But when we go to look at the RSP, RSP, there we go. We can see that it took a much major hit, showing there was more sell-offs in more areas than the unequally weighted S&P 500. So that's a great question, and I would have to say yes, we are seeing more breadth in more areas now today than we were last week, okay? We're also seeing more volume in more areas than we were last week, okay? Mostly healthcare has been really, really doing well. So keep an eye on those healthcare stocks. Communication stocks have been doing really well as of not. And Bitcoin. Bitcoin has been doing very, very well as well. Okay, so very good question. Do we have any more questions before I continue? Okay, well then forever hold your peace. We are going to go through my current account list. Now, I still hold 1/8 of NVDL. If you guys watched my YouTube short today, it explained exactly my reasoning for being in NVDL. If you're not aware of it, NVDL is a NVDA ticker. It's a smaller shared ticker that moves faster. It's leveraged, meaning it's a smaller share size, but it moves 1.5 times the amount of NVDA, so that way it keeps up with the same price movements. So NVDL is just the same price action movements of NVIDIA, but instead of buying well over $1,000 share and using all of my PP or my purchasing power, my PP I can now use for much more uses here. I can buy many more shares of this, so I can make much more money with what I have. Okay, so that purchasing power is very, very important if you can find a levered ETF on a stock. Now, of course, we know NVIDIA has its stock split very, very soon. Dan, Bob, what was the date on that stock split?
Monday or Tuesday.
Is it Monday? It's that soon, is it? Monday or Tuesday? Yeah. So we've had a lot of questions, guys, coming up about that stock split. And actually, Dan brought up a really good question. We have it in the general chat. You don't mind if I read that, do you?
Oh, of course not.
So he asked if NVDL or NVDA, will it be affected by the stock split? And it will be affected. Everything has a reaction, right? And so my answer was very clear. Most likely there will be increased volatility. Which way it will head is a crystal ball question. Nobody really knows. And if you're listening to somebody that tells you that they know exactly what's going to happen, you're not listening to the right person. So that's a crystal ball question. Now we can look at the past splits. We can see how those work in play stocks, like the in play stocks, right? Like so Meta when they split, or Google or Amazon when they split, or any of these tickers that have split their shares, how they reacted. But even then, NVIDIA is still going to act however it wants to. So just the past history doesn't produce the next performers, okay? So the theory behind the split with a 10-to-1 split is going to be much easier for us, you and I, retail investors, to buy more shares. On the same hand, with more increased volatility, that might give institutional ownerships an easy sell. Meaning, if you and I get excited because now we can afford something, it goes from 1,000 share stock to $100 stock, and we start buying that up, you're going to see a lot more volatility coming into the play. With a lot more volatility coming in, that gives the institutional ownership time to start to sell, right? And they sell all these shares, then it starts to dip back down. And when it gets back down to, say, a moving average, like a 10 or a 21-day moving average, they start to buy and accumulate those shares back up, okay? That is kind of the psychology. It's a game that is being played. When things start to get very excited, a lot of times that's when retail investors start to get hurt. Now, I'm not saying that's what's going to happen, but I will say that I have seen this happen before. Okay, so that might be exactly what happens, but that's why you need to have a process when you're playing these. And my process was I bought after earnings, never before earnings, but after earnings. I played an opening range breakout on the 1 or 5 minute. Personally, I took the 1 on this trade using this low of day. I got in at 50-ish. I'd say $50.05. Actually, we can just bring up my active trader. I got in at $50.09 using that low of day. And you can see these white lines here. I exited 1/4 of my position, another 1/4. Then I exited 2 more times, but I'm still holding 1/8 of my position. All right, so I think this was 1/8, 2, 3, and probably most of the rest of it. But I'm holding 1/8 of that position because I held 200 shares. I'm down to 25 shares. We're still up around $535 on this last position. So I've already paid myself. At first, I moved my stop up to break even, but that 10-day moving average ripped right through it. So now I'm just following this 10-day moving average. When this closes below this 10-day moving average, that's when I will exit my trade. Okay? So I have plenty of room for this thing to continue to work. So that's why when people are so worried about what's going to happen with the stock split, people are asking, well, I just bought this and it's up 10%. What should I do with it? Well, you should have a process in play. You should have a better understanding of what's going on with the stock. You should know that it's already extended. You should have never bought. Now, if you're playing it extended, it should be an intraday trade. You're buying and selling the same day. Okay? So that's my thoughts personally. The play was all the way back here after that earnings. Now, you can't play this. It's too extended. The second you buy, it's probably going to come all the way back down to the 10-day, right? And you don't know how much further it can come down. Nobody really knows what's going to happen with the stock. But if you truly believe in the NVDA, wait for the setup, wait for the trend, wait for the base breakout, and then take that play. And if you don't know what a trend or a base breakout is just yet, guys, you need to check it out in the resources. We have episodic pivots now, we have trend breakouts, and we have base breakouts. So much to learn from all of those and so much risk management to learn as well. Next one, this was brought up by your boy Covey in the community. Covey actually brought this up. He was talking about this beautiful base breakout here. Now, personally, I didn't care when I first looked at this. I didn't care about this base breakout. Okay, I really didn't care for the look of this. It looks kind of choppy. It's not like our beautiful, beautiful ship where it's got this super, super tight base breakout where it gets tighter and tighter on the 10-day. So this looked a lot more choppy than that. But I tell you, Covey has a good eye for these base breakouts. And sure enough, he proved himself again today on this base breakout. He pointed this out, and so I used this area as my base breakout using this point, 1, 2, 3, and roughly 4 areas of contact. You can see it's following the 10-day moving average and got very, very tight at $6.07 the day before. As it slowly moved up, if we take a look at this 5-minute time frame, you can see right here, we started to get some volume blurps into this. I decided to enter the trade when Covey pointed this out. I seen some volume come in on this trade. As we broke back down, I decided to exit close to that end of day, and I told myself I'm going to the gym, but if this thing pops back up on volume, which it did, I'm going to rebuy this so that way I can hold overnight. But if it continues to just stay low and below that volume price average that it was bought, then I don't want to be in this. But there comes the volume in once again. Let me just show you guys here. The volume came in once again. I bought at a lower price at $6.17. And look what this beautiful, beautiful chart did in the aftermarket. So it says that we're up about $375, $350. I did the math. If it stays at $662, it's actually up around $450. So that's a beautiful, beautiful trade. It's up over 7%, almost 8% now, guys, from its previous open. So, that's a beautiful trade within, in a couple hours, making that kind of money. So we're going to see what happens. Now, ASTS, if you guys remember, I talked about that this was an extended stock, but if you look at this up here on the hourly, we called all this out, guys. We called all of this out on Sunday's talk. Okay, so if you guys aren't there for Sunday's talk, it's much more in depth. We have a whole watch list for you every Sunday, just like I'm going to give you a watch list tonight. So make sure that you guys are a part of that Sunday watch list. We'll definitely be going live, and it's going to be absolutely amazing. So ASTS, if you guys remember this, we had this beautiful hourly downtrend. It broke above. Now, why did I take it here below? Because if we move in on the 5-minute, I've been visualizing these types of trades. If we look at the 5-minute, it created another downtrend just below its downtrend, and I was more than happy to take this new lower highs. And when it broke out here on volume, look at this volume, guys. This is the stuff I'm talking about right here. Look at that volume, much higher than all of its previously traded. So I decided to get in. I don't remember how many shares I took. I think at the time it was like 900. I exited a piece right at the trend because it could fail at the trend, but it decided to continue. So I'm still holding on to 300 shares. Now for today, it's traded sideways for the next day. That this morning, it just ripped up. I was up another $300 on this. So in total, I was up over $500 on this trade, and it decided to break right back down. Now, what did I do? I didn't panic. I wasn't worried about the pullback at all because I have a plan and process in place. So, huge pullback here. Sure, it sucks. Sure, I should have got all my shares out, right? No, that's not part of my process, right? So if we look at this, I can even show you another way of looking at this. Look at this uptrend now, okay? We can draw lines all day, but I like trend lines and bases, okay? I try to keep it pretty clean. But my main issue is I've already made my money on the stock, so I've moved my stop loss up to break even. So until this moves up above the 10-day, moving up above my break even, I'm going to stay in this stock until it hits my break even or until this 10-day moves up higher and it closes below that 10-day. So it's absolutely amazing seeing ASTS. Now, next up is First Solar. I called this out in the watch list today. This was a beautiful breakout. So I seen two breakouts on this area right here. I seen it on the hourly. We'll just show you guys what it looked like on the hourly here. So this was the hourly breakout right here. I wasn't able to be a part of that because there was a couple of higher highs here in this that kind of mucked up that perfect First Solar breakout, right? The 10-day moving average is lingering just underneath here, so I'm okay with buying it. So I waited till it got above that, and then I took it at the next high. When I took it, I took about 100 shares, and I ended up exiting a few of those shares once it popped up because I realized once I bought 100 shares, I realized my risk management was not appropriate. I did not like that because if I'm risking that much and I'm going to give it room to breathe, which is this low of the day, the biggest issue I have on that is going to be the simple fact that I'm risking far too much, right? 100 shares on that from 65 to 75 is going to be $1,000, guys. I don't want to risk $1,000. So I reduced my share size to 25. And if this thing can hold overnight and start creating new lower highs from here, we will continue to hold this, okay? So I do like First Solar. It is 110% a leader in this market currently, and it had a beautiful, beautiful pop up here. This pullback's creating this trend. I'm in it to win it, baby. I'm going to give this room to breathe, and if this market can continue, I do truly believe First Solar can continue. Now, if you guys remember, I took FNMAS, which is a Fannie Mae. I only took 400 shares of this, but if you can see, this is my trend break strategy on the daily. Right, here's this trend break strategy. Absolutely beautiful trend, ascending trend. It broke out on volume. We decided to take it at 453. I bought 400 shares. I'm not even touching it. I'm just going to let this thing keep going. I just keep bringing my stop loss up underneath this 10-day moving average. As long as it holds the 10-day moving average, I'm just going to let this thing do whatever the hell it wants and let it keep paying me. So this has been the easiest trade I've ever been in. Also the slowest trade. We're up only $272 in this trade, but it is what it is. I also took Abercrombie and Fitch because it has that same setup as First Solar. It's also a leader in the market. We had a huge push up on earnings. We're waiting after earnings for a play, and sure enough, it created a downtrend, and now I decided to take this on the 5-minute. You can see we had a beautiful breakout. I'm sorry, the 1 hour. We had a beautiful breakout. I took that at 171.86. We're up about $83 on this. I'm expecting continuation, but I'm also giving this room to breathe. I know from previous trades back here when I played this trend breakout that ANF does like to trade sideways before it pushes higher because that is what a healthy stock does. Now, I am clearly going to give this time. I'm clearly going to be patient with this. And as long as the market continues to do what it does, I really think ANF is going to continue to be a leader in the retail sector. Now, before I go through my watch list, do you guys have any questions on my trades, on risk management, or maybe a trade that you had that you want me to go over before we actually go over the watch list?
So you're trailing stop loss. You're using the 10-day as the trail, the
Absolutely.
trail marker.
Absolutely. The only time I ever use a different trail is going to be if it follows a different trend. So let's use, well, we can use, it's hard to use this as an example, but let's look at this way. If we look at NVDA, you can see that it follows the 10-day moving average, right? And if it breaks down below, it's moving, it's losing its momentum. Now, in hindsight, it rips right back up and gets above the 10-day, right? But you can see it constantly is following that 10-day moving average, okay? It's also hit the 21 and the 30, but mostly it follows the 10-day moving average, right? So I use the 10-day moving average. Now, if this stock was following a 21-day moving average or a 30-day moving average, I would most likely use those moving averages. So these are here just as a guide. So generally, yes, I'm using the 10-day moving average because I'm a more get in and get out kind of trader, just trying to snatch up that momentum and then let it ride, okay? RSKD, let's take a look at this. Now, this thing followed the 10-day moving average. Bounce, held the 10-day, bounce, 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 gets tight on the 10-day. So I'm going to use this 10-day as my guide. After I take profits, which will probably be tomorrow morning, first thing, I'll probably exit at least 1/3 of this position, depending on how I feel or how the market looks in general. I will exit probably 1/3 of my position, and then I'll move my stop up to this break even at 617 until the 10-day moving average passes it. The second we close below that 10-day moving average, I'm washing my hands of this trade, and I'm going to say, hey, I made money. It was fun. On to the next trade. So that's a great question, Dan Bob. Yes, usually the 10-day moving average, unless the chart shows me otherwise.
I have a little bit of a follow-up to that.
Sure.
So when you're getting out of the trade when it drops below the 10-day. Now, is that when it drops below the 10-day or when it closes below the 10-day?
Okay, so I'm really happy that you brought that up. I'm very, very happy that you brought that up. Now, I probably can find a trade where I really mucked up, okay? Here it is, right here. Let me see. Maybe it's not this one. I might, oh yeah, you know what? I do know which one. ASPN, that's it. Okay. So guys, check this out. Dan Bob, I'm so happy that you brought this up because this is my biggest weakness right now as a trader. Okay. When I see something break the 10-day moving average, I panic sell. I say this thing's done. And Adam's been with me. Covey's been with me. My right-hand man has been with me since day one, and he knows I do this. I always say we do not close out of the position until the close of the 10-day. But 9 times out of 10, I'm trying to save my ass, save my profits, and save those losses, or save those gains, technically. And I exit at the 10-day moving average if it breaks below it. Okay? I usually don't even give it any time. And right here, ASPN is my biggest failure because I called this base breakout. I think it was actually called out by Covey. I took this trade on volume. If you guys remember, ASPN in the pre-market, right towards the end of the day, I grabbed this trade. I think it was ASPN. Correct me if I'm wrong, guys. But we grabbed this trade in the pre-market, and it ripped, and we were holding on to this. I think I only had 100 shares. It was ASPN. It was in the pre-market. I think I grabbed it at 27.50. Yeah, it was 27.50 because our whole crew was watching this trade. So I got in this thing, and look at this. We were up, 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 up. This thing failed, broke through the 10-day, I exited right here. Sure, I made some money on this, but my process, or at least what I preach to everyone, is we don't close until the close of the 10-day. Where did it close? Right back up here at close near the all-time highs at the time at almost $30 a share. So I exited out of this just below the 10-day moving average when I shouldn't be exiting at all. I should still be in this trade at 31.42. So I should still be up on this trade quite a few $100s. This would be, let's see, 27, 28, 29, 30, 31. I'd be up $400 on this trade, except for I sold out and I only made about $100 on this trade, okay? So that's a great question. I am supposed to close out. My process that I preach is you close at the end of the day if it has closed below the 10-day moving average or whichever moving average that you find relative support on. That's my biggest trader. That's my biggest weakness as a trader right now. And right now I have promised that NVDL, no matter what, no matter how extended we get, I will not close until we close below a 10-day moving average. Okay? So that is my I will do this. Okay? So Dan, I'm actually really happy that you brought that up. That is my biggest weakness. Nadayo, it looks like you just joined. John Swan, thanks for joining, brother. I was actually just thinking about you today. It's good to see you in here, brother. Okay, guys, do we have any other questions about the process of the trades that I'm in, whether it's the risk management or anything that I'm doing?
I just have one thing to add real quick.
Sure.
And it's because I've seen certain questions in the chat, and I had to admit that I was actually doing this myself to some extent. When you're looking for that close below the 10-day, a few folks like myself are looking at multiple time frames.
Yes.
They need to make sure that for the close that they're operating only on that daily time frame.
Very, very good.
Because that was a big question I had early on.
So that's
and not get nervous in the lower time frame.
Yes, Predator, thank you so much for bringing that up. So guys, everything that I teach in my process is going to be on the daily time frame. You can go ahead and look at things on the hourly or the 5-minute or even the 1-minute if you're feeling like a crazy maniac on drugs. Go for it. But I suggest as a trader, you should stick to the daily and the hourly. Now, when I talk about my moving averages, I'm only talking about it on the daily time frame. If you guys look, the only thing I've showed you was the daily time frame. I might say this is a trend break on the hourly, or I zoomed in on the 5-minute to look at the volume. But when it comes to the technical analysis, I always zoom out. I always want to see the most information so I can understand what price action is showing me. So thank you so much for bringing that up, Predator. And I really need to focus on that because a lot of newer traders don't focus on those time frames. You want to see confluency across those time frames, but you want to start out zoomed out. Awesome Art has a question about GME. Should we get involved in GME? Well, if we look at GME, you're more than welcome to get involved if you have a process. I always preach process. So right now, I have nothing to play here, right? This may have been a nice base breakout. You could have taken at 23.89. Okay. Personally, I'm waiting for a short setup right here at 32. I'm waiting for this thing to get up to 32 so I can short it. Okay. But I personally, if it gets up to that $32 price area, which it looks like it's at right now in pre-market, actually. Well, I'll do that after the show. I'll take a look at this after the show. But I am looking for areas of high volatility that I can find a move on. But when you ask, should we get involved as a newer trader? If you don't know what you're doing, this is the most manipulated stock out there. So if you buy, just imagine somebody's watching you, okay? You're probably going to buy at the worst time and sell at the worst time, and that's exactly what they're doing to traders. This is the whole reason why it came back alive, okay? So if you're asking if you should get involved, you absolutely should if you have a process and a plan and a trade that's in place using risk management and you know what you're doing. But if you're just going to buy because you think it's going to go up or you're going to short because you think it's going to go down and you don't have a process or risk management in place, absolutely not. This should be hands off. This is not a, investment strategy, or it might be for you. It might be for you an investment strategy. But for me, I would personally say I'm hands off. Okay. I'm only going to take intraday trades on GME. Okay. I love the fact that it's back in play. I really do. I should do more YouTube videos on it, honestly, because a lot of people are coming back to the market because of it. So it's a beautiful thing, and I can't hate on it. This thing really could get to going. The volume's starting to come back in, actually. After this big sell-off, the volume's starting to come back in. It might go up higher, but I see resistance on the daily. If we look at it, we can see resistance here at $32, and we see a lot of resistance up here at $52. So those are going to be the areas that I'm looking to short. And if it starts to rip higher, I'll exit out of it. It's no big deal. I'm not too worried about it. But I don't see this being, some crazy push higher. Now, I could be completely wrong. This thing could continue to rip. I've even marked out in all these gray areas, all the resistance areas, and I marked out this being the highest resistance area at $80. And you can see it made it all the way up there and touched that area that I drew out for you and then failed right back down. Okay, so keep that in mind. It's highly manipulated. There's a lot of volume. It could go up. It could get shorted again. But as a newer trader, I would say try to avoid being hurt. Do you guys have any more questions for me before I carry on with the watch list? All right, well, we got about 20 more minutes, and we're going to go through the watch list. Now, we already went through RSKD. This is a beautiful setup as a base breakout. Now, this is a little bit more of a speculative stock. This John Hammer that was in here earlier, he brought this up. I want you guys to keep an eye on this. This is another Bitcoin play. Just like IREN, we talked about IREN. Let me take IREN as a Bitcoin play. You can see it's the same trend breakout. The volume came in and it rip, tater chip to the north side. We even played this area for a trend breakout too, made a couple $100. It was a beautiful play, and now it's continuing higher. Now we might see the same thing happen with WULF. So put this on your watch list. If you can find a trade within this, I feel like the breakout was $2.54. I might be able to find another way in, maybe at market open, but we are watching Bitcoin for this clean miner play, okay? I'm also going to get a little bit more information from some more experienced traders when it comes to these lagger plays. Okay, this isn't a leader. The leader is Bitcoin. This is a lagger in the miner sector. Okay, so also keep that in mind. I'm still looking for an entry on this silver short. I missed this short. I've made a little bit of money on this short, but I'm looking to short silver. So if it can pop back up and show me an area of resistance, I'm going to find a way to get into PAAS as a short play, but these don't have a process, guys. I do not have a process for a short. It's kind of a buy and an area of its resistance and hold, okay? And if it gets back up, I exit out of the play. I'm still trying to learn a process for shorting, so I don't condone anyone to actually doing this. We have AZN, which broke all-time highs. It started to form this base right here. This isn't what we call a clean base breakout, but I do want to point out that this is a leader in the overall sector, so I'm keeping an eye on it. Now, it's a very slow mover at 1.1%, so I'm actually just going to take this off my watch list so that way I don't end up messing around with it. But it is a leader in the market. So AstraZeneca, it's very important that this stock continues higher. It's going to bring a lot of the overall stocks up with it. ARM is also on the watch list. This trend breakout, guys, you'll see these trend breakouts are extremely powerful. This ARM had a nice breakout 3 days ago. It actually came back, and you guys will hear me talk about the retest all the time. This had a retest of that base breakout, and then boom, rip, tater chip to the north side. I know B. Stewie in the building called this out in the morning. Awesome Art, I'm just seeing your chat. You say thank you. You're absolutely welcome. I appreciate you being here. B. Stewie got into this baby, and he got in on it on volume. This was a great trade. I absolutely love where this is heading. And obviously, this is not a leader. NVIDIA is the leader, but you can clearly see ARM is a contender. We got some volume coming in here as well. So as long as NVIDIA heads higher, I do believe ARM's going to head higher. But if you guys remember, when NVIDIA started to show some weakness, ARM really fell down hard and quick. We actually made a lot of money. This is my big drip setup, Dan Bob, right here. If we just look at this, you can see it's making new higher lows, but new lower lows as well. And then I played this big drip setup, and then we made a lot of money this day. I actually only played it from about the break of down to maybe 117, and I left all this on the table, but hey, sometimes that's trading. There was a lot of volume that came in here too, but you got to learn from them, right? You're a loser unless you're learning. Next up is NVCR. This also broke out, and you're going to say, Dave, you're showing me all these things on your watch list that have already broken out. Well, I also told you in the beginning, the S&P 500 is extended from the 10-day moving average. Why would you expect anything to be setting up currently? Now, we are going to see some setups, but they're going to be a little questionable now, because why didn't they carry on with the market? Because they're not relatively as strong. So you still need to keep these on your watch list and wait patiently for an area that you can find your process in, whether it's a trend or a base breakout, okay? We have DDL. Now, this is a slower mover. When I say slower mover, I mean the volume is not much there. It does look like it pulled back from the last time I looked at this, but it had a beautiful trend break. This thing really started to break down, and now it's below a 10-day moving average. So I might end up taking this off my watch list actually within the next few days. If you're into gold, USAU is still sitting up here. It's still looking fairly nice. I'm not a big fan of the precious metals. I really think that they're going to start to fail here. But if you're into USAU, I'm keeping an eye on it for my own personal reasons. So we have ASTS. As you guys know, I played ASTS. This thing might continue to trade sideways and form a base here before breaking out, but this is a leader in the market, so keep that on your watch list. IPW also broke out this beautiful trend. It's just kind of trading sideways now. It might form another trend or another base. That would be beautiful. GTE, this is following the 50-day moving average currently. We're going to see if eventually it's going to come back up here and start to get tight to break out of this 939. But it's hard telling if this is, I mean, it's just looking choppy now, you know? Oh, yeah, not a Nilish. SG is a good-looking stock. We'll get to that in just a second. CRS, it was a little unfortunate to see CRS start to break down at its all-time highs at 112.75. But if it can hold this 21-day moving average, we might have a play in the near future. We also have RSI. RSI looks like it was going to break out right at the end of the day. So right here is your base breakout. I called this one out in the chat. As Dan Bob pointed out, we did not have much volume on this, but anytime you guys see me call something out in the chat, it's never a buy or sell recommendation. All it is a watch. You need to watch what's happening, right? And we've seen that there wasn't much volume on this, as Dan Bob pointed out. Towards the end of the day, we got a little bit more volume, but it wasn't anything to really take a trade on. And as you can see, it's right back down there in that $9 area. So if we want to keep an eye on this, maybe set our alert to the high of that day at $9.11. If it can break out above this on volume, this could be a potential play in the very near future, maybe tomorrow or the next day, if the market continues to rise higher. Now, we do want to take a look at what is RSI, because I'm not sure I looked it up personally myself. So if we just take a look at RSI, and by the way, this is Trader View. If you guys go into the resource section in the Discord, we have a link where you can get a few days for free. I think it's a week for free. It helps me out a lot if you end up actually purchasing this, but you don't have to. It's absolutely free, just like everything is in the Discord. RSI has beautiful looking earnings with a net margin that's constantly slowly rising. But Rush Street Interactive engages in the developing, supplying, and operation regulated online gaming site. It operates in real money online casino and sports wagering in New Jersey and Pennsylvania. It also operates online sports wagering in Indiana, Colorado, and Illinois. The company was founded by Neil Gray Bloom. So that is what that is. It's a sports gambling, and it looks like it's working out. I mean, the price action says we have a base breakout right here at the top. If it wants to get above that $9.11, I think we might have ourselves a trade here. Now, ELF was actually being played by your boy Night Owl, and it looked like it had a nice breakout here. I remember him playing it the day before the base breakout, and then it ripped up higher. It looks like it's trying to set up again. With the market continuing higher the past 2 days, this has been pulling back. So it's interesting to see this kind of not work with the market here. It's beating to its own drum, but I'm going to continue to watch it because it was a past leader. If it continues to perform, we might be able to see this thing continue higher. And if I can find a good area to get in, I might actually take that. We only have a few more on here, so if you have any other thoughts or questions, I see we have SG in there. We're going to definitely take a look at SG very, very soon. If you guys have any other tickers that you want me to take a look at, we only have about less than 15 minutes left, so make sure you put those in the messages so that way we can go over them. Try to keep it 1 or 2 minimum, or 1 or 2 maximum, okay, guys? AEM looks like it's breaking down. This thing will be off my watch list very, very soon. PWFL, or Powerfleet Incorporated, also look like it's starting to break down. We'll leave it on there for a couple more days. MNDY. So MNDY, this is a shit ticker, guys. This is a shit ticker, so do please keep that in mind. We don't want to really condone or spreading the word of these shit tickers, but I also do want to point out that it has my beautiful base breakout, and it looks like it just broke out in pre-market, which it doesn't seem to move very often, but it broke out in that pre-market or aftermarket today. It's up today. So it's going to set my alert off for me tomorrow. What is MNDY or MNY? Money Hero Ltd. engages in the operation of online financial comparison platforms and related services to credit card, personal loans, mortgages, insurances, and other financial product. The company was founded in 2014 and is headquarters in Singapore. So it is not a U.S. company, but that also makes it extremely more speculative. So you need to be very, very careful with these shit penny stock tickers. MNY is on my watch list because look at this base or this trend breakout. Now it's sitting at 225. If this thing gets to run, and I really think that we can make some money on this, I have a little bit of capital left. I'd like to absolutely see what this thing's going to do. We talked about ASPN, SHIP, ONON is also running, guys, so keep that in mind. I see your guys' tickers coming through. We'll definitely look at SMTC and AMRX. ONON, guys, I fumbled this play right here. I didn't get back in. I was in it over here. It ended up stopping me out for a couple $100 loss, and now look at this thing, you know. But hey, this is part of trading, you know. That's why you got to stick to your process, learn and understand. I bought it a little too extended. As you guys can see, we're extended from the 10-day moving average, but I tried to play this. It is what it is, you know, and it got away from me. So maybe I need to learn a little something from there. AMRX is one of your top watches. We'll definitely go over that very soon. And NVAX, guys, if you guys weren't with me on Sunday, we talked about NVAX. Look at this beautiful, beautiful daily trend breakout. The daily trend breakouts have been working absolutely bellissimo, phenomenal, absolutely amazing, guys. So it's so good to see this beautiful trend break to the north side. I was not able to get this. I know we have quite a few of you in the chat. I know Danny got it. I know B. Stewie got it. Who else got a piece of NVAX? We called this out. I said this was on the top of my watch list. Look how tight this got on the 10-day moving average. Man, I was in the doctor's office, and I tell you what, I wish it was for a different day because I was going to load the stinking boat on this. But Adam doesn't like to hear me talk about shoulda, woulda, coulda trades, but it's okay. I'm still here rooting for you. So whoever still has this, congratulations to you. I'm very, very happy for you. I'm glad somebody could have actually made some damn money on this. So that is what is on my watch list. Of course, there's not too many setups on there, but the S&P 500, where it's at, you can't expect too many setups to be formed. We set you up for those setups, and now that is where they're going. So a friendly reminder, before we go over what everybody brought up in the ticker list, hit that like, hit that subscribe button. If you've made it this far, power to you. You are here for many reasons. You're here to better yourself. You're here for a beautiful stock watch list. You're here for the state of the market. You're here to prepare yourself for the trading days ahead. So congratulations to you. I condone you, good sir. I tip my hat. I curtsy to you because you absolutely earned that, okay? So NVAX, let's move on to what we have in the
Hold on.
What's up? What's up, big dog?
Hold on. A quick question on NVAX.
Let's
and I
talk
think I
about
know
it.
what you're going to say. So I'm just really testing myself here.
Okay. I like it.
I noticed that on 6.3, when you were talking about missing the boat on it, I noticed that on 6.3, it just went above the VWAP. And I was looking at the 5 minute, and I noticed that today it also went above the VWAP around like $19, maybe 19.10 or whatever. Um, do you ever, not ever as in have you ever done it, but have you ever as a process? Because I know you like the VWAP a lot, the anchor VWAP. Do you ever play that as a process? Like when it
So the
goes
anchored
above the VWAP and play it?
that's a really good question, Predator, and I can tell you, I can make this very cool for you. So anchored VWAP, just so you're not confused, anchored VWAP and VWAP are two totally different things. They work the same, but understand that VWAP, this purple line, is the average daily volume weighted average. So it follows from the time it opens up in the morning. You'll always see that it's right at VWAP, and then throughout the day it will be somewhere different because this is the average for the day, and then it starts over in the morning. See how it anchors itself to the beginning of the day? So it
Roger
always
that.
starts at the beginning. So in the morning, yes, this is a way to play it. A lot of people will play the bounce of VWAP on a strong stock. And as you can see here, and I'm so happy you brought this up, as you can see here, we had a huge liftoff on volume. It traded sideways, and look what it touched. It touched VWAP right here, and boing, bounced right up off of it and headed much, much higher, never looking back. Okay, so do I use that part of my process? No, but I have been tickling the fancy, right? I've been tickling that idea when I miss a trade to take half of that share size and load the boat, not load the boat, but take half of that share size, buying in at VWAP and then risking that low of the day if the risk management shows fruitful. Okay. So as long as it's not too extended from the low of the day and I can still buy my shares at VWAP and still use that low of the day and it still be proper risk management, I'm still going to get a 5-to-1 risk to reward ratio, then yes. And we actually talked about that on ARM today, B. Stewie and I, where we know for a fact that this was the area to buy in because this right here is the trend breakout, right? If we look at the daily, this is the trend breakout 3 days ago, or you could have bought it on the retest, it's a hard buy, but there's usually end up being the most fruitful. Now on this day here, which is today, it came up, right? And if we look at this is the 5-minute, it came up on volume and it's like, oh man, when do I buy? Well, first red candle in a 5-minute bounces off that VWAP area. You can use the low of the day and then boom, this thing just continues higher. Now this is also hindsight trading, but if you take this trade enough, you'll have a process based around it and you can focus on that process. So great question. I do appreciate you asking that. All right, guys.
Congratulations. You just answered the question for Dan Bob too. Dan Bob, did you catch that? What he answered for you there?
No, I didn't.
Low of day.
Oh, low of
The
day.
question you had yesterday?
I usually always try to take low of the day because I'm a momentum trader and I'm trying to get it the day that it breaks out, right? And if it's not breaking out that day, then my thesis is wrong. I did not get in the day that it was going to break out and then continue its momentum. So if we are momentum traders, which if you're here, most of you are momentum traders, that's what we're trying to learn, then you'll know that we are trying to get that momentum. We're trying to get it that day. And then as swing traders, we're trying to let it carry on, but give it enough room to work. Okay, so that's my thesis there. Now we're running out of time here, guys. I want to make sure I get to your trades. So let's go ahead and go through these really quick. We have SG. Now SG is extended. We've been talking about SG for a long time. It shook me out way back here, which really pisses me off because I told you guys multiple times that this was a very hot stock and I wanted to be a part of this, as well as quite a few other kitchen ticker names. We're breaking the new all-time highs here, but we're extended on the 10-day. So I'm waiting for another setup on this. I'll put this on my watch list again, just because I need to keep an eye on this. But we need to give this time now. This thing, rip, tater chip to the north side. It's up what? I don't even have the percentage it's up today. 3.9, almost 4% just in today's movement on volume too. So Sweet Green's looking good, but it's extended from the 10-day now. The trade was either the base breakout here, the base breakout here, or the trend breakout back here, but you would have been stopped out. That's where I got stopped out on that trend breakout. But hey, you cannot win them all. They don't all work out, right? It was just the wrong time management. So sweet green is looking good, and I appreciate bringing that up. Let's see. We got SMTC. You're very welcome. You are very, very welcome. And I'm glad you're keeping an eye on strong stocks, guys. That's what we want to see. SMTC. So SMTC looks like it had a beautiful gap up on earnings. So let's take a look. We have negative 16, actual 6. So let's see if we got an EP on our hands here as SMTC gaps up on its earnings. I'll show you what I'm looking at. I always like to use this trader view to dive a little deeper in this. Now, it's only a market cap of under 3 billion. What does that tell me? That it is a faster moving stock. What does this tell me? The financials are pretty shit, but that's a-okay because it looks like it's doing well on its earnings. Let's see how the surprise looked. Well, the surprise was 301% on its earnings. That's absolutely amazing. Now, its revenue was 2.97%, which isn't too crazy because the estimate was 200 million. They got 206 million. We want to see something more like a double, like a 400 million, but that's okay. So far, this is looking really, really good. I'm going to have to put this on my watch list now. We'll continue to do the research on SMTC. Now, on a technical basis here, there's a few things that we want to ask ourselves, okay? Is it been on a run up the past 3 months? Yes, it has. So that's not too plausible for an episodic pivot. So I would say right away, no, this is not an episodic pivot. I know that's not what you're asking. You're just asking for the analysis. But yes, this had a run up before the earnings, and now it's just gapping right up into its area of resistance. So if you look at the hourly here, you can see the gap up goes right into its area of resistance and could not break through that area of resistance. Okay, also, if we look at this, we can also see that the volume was 2.31 million today when the average volume is 1.58 million. So even after earnings, it was not compelling enough on earnings to say, whoa, we doubled our earnings or doubled our volume or tripled or quadrupled our volume. So what I would have to say is tomorrow morning in the pre-market, we want to see a lot more volume and it gapping above this area of resistance. And then in the process of the very next morning, within the first 1 to 5 minutes, we want to see at least half to its full average volume of the volume of that 1.58 million coming in within the first, the pre-market or within the first 15 minutes of the SMTC opening. So let's keep this on our watch list. I think this could be very fruitful. It already moves 4.4%. So I appreciate you bring up SMTC, and I would have to agree with you that this is a very nice stock to keep on our watch list. So SMTC not being considered an episodic pivot, but we might look at this as an earnings continuation play because we might actually see this get continuation or continuation drift, as some people like to call it. So very, very nice. I do appreciate it. Who brought that up? Awesome art? Okay, hell yeah. Nice job. I like that. She said position on it. My alert went off for AMR. Oh, no, that was SMTC. Sorry, that's Yosef. Yosef, I appreciate you bringing that up, brother. I really like that. Very, very good. AMRX. So AMRX, look at this. Yeah, I see why you got this on your list too, Covey. So awesome art. I would have to say this is a beautiful base breakout in the making. Why didn't it break out today, though? That's the question. I would like to see this have a lot more volume on a day like today. When everything was moving, this kind of just traded, meh, it moved up. I don't know what kind of wick's going on here in the aftermarket, but it got soaked up. So, but yes, my alert is sitting at $6.93 for the break of $7. That's $7 is the even number at $7. If it gets above 7, I think it would be great for a trade, but this is my ideas, not yours. But yes, this is exactly what we're looking for, awesome art. And do you do art? What kind of art do you do? That's the real question here. Jolene Martina, my forward air took off. I'm not really sure what that what you got on there, Jolene, but I hope it's a good thing. Let's see. Yeah, what price did you buy? 677. Okay, cool. So Awesome Art, if you bought at 677, I would say that's kind of a premature buy. I don't see the reason why you bought at 677. You might have to dive deeper on your process on that. I really think the buy is at $7, or if at minimum 692 on volume. So I'm not seeing any volume coming in that would be, really a taker for the day. But I'm also not bashing your play. I just don't see the volume, and I don't see the play here. It's not part of my personal process. So I do wish you the best of luck, and I hope you're a few dollars or you're 20 or 30 cents ahead of us when we decide to buy AMRX. So that looks really, really good. Crochet and jewelry, I like that. I've done a little crocheting myself. I made a scarf, but that's about as far as I made it crocheting. Because, man, that is a patient thing to do. So I love to see that crochet and jewelry. Maybe in the general chat you can show us a little bit of your crocheting that you've done. I do appreciate a good blanket. I actually sleep with the crocheted blanket that my grandmother made me years and years ago. It's called the Coat of Many Colors. It's from a biblical thing. I think it's Joseph's Coat of Many Colors. But she made this blanket for me. It's absolutely enormous. It's like, I don't know, 7.5 foot long and like 4 foot wide. So it's just a huge blanket. Absolutely love it. So it's absolutely beautiful thing. So, okay, we're running really late on time now, guys. So we're just going to make sure that we run through this. AMRX, let's do ATI. And I'm sorry, guys, but we have to make sure we just run through this. So ATI looks like we have a base breakout at 61.76, but it's been breaking down on that 21-day moving average. So keep that in mind. It's sitting on a 30-day moving average. I'm going to set my alert up here, but guys, this one's not looking good. So I don't care for ATI currently. So let's see. Yeah, I think that's it, guys. I really appreciate you guys having me tonight, being here for me. It looks like, how many people we got? 1, 2, 3, 4, 5, 6, 7, 8, 9. We got 11 of you showing up tonight on a Wednesday night. That's absolutely beautiful. I hope you guys have a green day in the market. I hope you guys have an awesome, awesome night. And Jolie and I look forward to seeing your crocheted blankets in the general chat. We'll see you guys very, very soon. What's tomorrow? Tomorrow we are going live on YouTube. I really hope everybody joins in on the live for YouTube. Help support me just the way I like to support you each and every single day. I hope you guys have an awesome night. And if you want to, we're going to hang out in the general chat while I get this uploaded. So peace, guys.